Good morning, this is Anka Metcalf with TradeOutloud.com. Welcome to my pre-market game plan for the major future indices, gold and oil for today, Wednesday. It is March 15th, 2017. It's 8:50 a.m. Eastern Time, and this is the FOMC day. At 8:30 a.m. Eastern Time this morning, we had CPI, core retail sales, and retail sales. And this has created this little cluster here of support, and we're going to talk in a minute about major support resistance levels in the major future indices, gold and oil. But let's not forget that at 2 p.m. Eastern Time, we have the FOMC economic projections. We have the FOMC statement, federal fund rates, and at 2:30 p.m. Eastern Time, we have the FOMC press conference. But before that, don't forget, 10:30 a.m. Eastern Time, we have crude oil inventories. We're going to talk a little bit about crude oil today and about the APA numbers that came out yesterday at 4:30 p.m. Eastern Time. So let's take a look at the technical analysis at these charts. So support defined here at 53.92. Yesterday we did have a very messy day. You can see it right here in this highlighted white area. We had a push to support level here at 53.63, a push back up, and you can see pretty much Christmas light effect. Nothing, absolute nothing moving here towards the end of the afternoon. We had a very boring day. We had one opportunity for a trade for a mini scalp. We trailed out of the scalp at 86. We had a target at 93, so we at 90, and further target at 54. However, you can see that it didn't quite realize that in the same trading session because there was no momentum. However, if you can see here, our technical analysis was right on the money with the projected targets. 53.90, it hit 53.90 in the overnight and getting very close to by 1 point to 5400. So what we have going on here is we have a cluster of support at 53.92 and we have resistance at 53.98. Obviously, if the parameters remain unchanged into the open at 9:30 a.m. Eastern Time, we can talk about a possible continuation higher into 5400. I highly doubt that we're going to try to attempt to try to break this 5400 area going straight into this FOMC day. Remember that close to noon, price action is really going to become choppy and it's going to become sideways. This is a characteristic of FOMC days. Usually it is like this throughout the day. It is a very narrow day because everybody's waiting for the projected numbers. Everybody's waiting to see if we're going to get a rate hike or if we're not going to get a rate hike, and the way the market is going to interpret it. So we don't have a clue as right now as what will happen in the market. Based on technical analysis, we know that if we break 5400, we have a clear void above, and the next projected target is going to be into 5404, 5420, 5450, and 5458. But in order for that to happen, we need to see what the numbers and what whether we're going to get a rate hike or not, because that's going to have to say in the market today. Let's move on to S&P 500 index. S&P 500 is a little messy. However, it found support at 2366, resistance 2370. If we clear this resistance area, we have room to continue into 2375. The next projected target is 2380, 2392, 2396, and 2400 back into that prior all-time high again. So we do have room to continue higher. We're basing very bullishly. Like I said, I think that today was most likely going to be a range day. We're going to see if it's scalpable or not. And if the range is wide enough, it will be scalpable. If the range is tight enough where we are going to have an asymmetric risk, then it's not scalpable, and it's better to not engage in any kind of trading activity until after FOMC. Let's take a look at YM. YM also very bullish. It is showing signs of bullishness. Yesterday, look at yesterday's price action. I mean, literally today, it was a very, very tough trading activity for YM. For yesterday, the range was very whippy, and it was very sharp. Uh, it just so happened that late in the afternoon it quieted down, the price action quieted down a little bit with the volume decrease, and we could have a little bit of a send in price, and 20,800 is the support area moving forward. Also, we have established another shelf of support, 20,823. If we break above 20,850, we have a shot in going higher into 20,880, 20,090, 20,920, and higher back into this all-time high of 21,162. So far, we have triggered today with this flurry up a daily buy, which suggests that we may have more price action to the upside. So it has a very nice looking daily chart. Technically, it looks buyable at this point right here into the 20,850. All right, let's take a look at oil. Oil API numbers came out yesterday at 4:30 p.m. Eastern Time, pushed the price higher, continuation into the extended hours, back into this resistance area, 48.85. This is a clear resistance area. You could see it from this cluster that happened into last Thursday. We had a push up into Tuesday into yesterday. We had a flurry down early Tuesday session. We got a flurry down and then back up on the APA numbers. So what we have in store for now, and unfortunately CL is establishing really wide ranges for day trading, and these are the ranges for the day trading for us not to get stopped out as often. A 48.32 is support. Obviously, $48.90, $49 remains the resistance area. Any break above $49 is considered bullish and can have a clear void all the way to $50. So if you're watching your own charts, you watch definitely small time frames as the price is going to accelerate into the $50 zone. Test it a little bit, try to stabilize in here, either pop and come back to $49, and thus that ultimately is going to represent the better entry before continuing higher. So like I said, this is support below 48.30. We're going to go back down to this $47 area. So now let's take a look at gold. Gold has been meandering with this 1200 level for quite some time now. The daily chart doesn't look as encouraging, and it's finding resistance at the 1208, 1210 area, and it's coming back down. And on a break of this 1196 area, you know, there's more room to the downside back into the 1180 area. So there is plenty of room for it to run lower. Very whippy. You can see that in the last hour it had a descent from 1202 all the way to 1198. It is a little bit extended right now. It just filled this correction cone back into the support level. So for today, the pattern is descending. A break below 1197 can be considered as a short. One last look at one index, and that is the Russell. Okay, Russell is very strong. I love the way the chart pattern is setting up. A break over 70, this is what I'm going to look for today. If we're going to get a break over 70, we have the potential of continuing higher, and we could go back to 1380 and 1390. All right, this is all for today. This concludes our pre-market game plan for today for March 15th. Don't forget, guys, that we have a class that is upcoming March 20th to the 31st. It is a 10-day class, Power income day trading futures. And if you would like to learn more about the class, visit our website. It is tradeoutloud.com/futures. If you're interested in registering for the class, email me at info@tradeoutloud.com. We're then happy to have a 15-minute phone conversation with you, talk more about the class curriculum, and how you can achieve your trading goals. The seminar is from the 20th to the 24th, every night from 5 o'clock to 7 p.m. Eastern Time, and live trading with me, Trading Lab, from the 27th to the 31st. 5 days trading lab from 9 a.m. to 11 a.m. Eastern Time. We will do the analysis together and we will trade together. All right, this is all for today. Thank you for tuning in. I hope you all have a very profitable trading day.